In terms of those that don't know Pact, we are Australasia's largest manufacturer of rigid plastics. I'll just cover a little bit in terms of the half-year result. Pleasingly, we were able to report growth in all key sectors and all key segments. So sales grew by 8% to $688 million. Our NPAT before significant items grew about approximately 10% to $45.9 million. In terms of our results, there were three key themes that drove those results. Firstly, the acquisition or a number of acquisitions that we made at the back of last year and one in September this year in relation to a company called Jalco. Jalco for us was a very important acquisition because it was the first time we'd actually moved out of specifically the rigid plastic space and into contract filling. So for those who are not aware, contract filling primarily is working with the multinationals and companies such as Audi to provide some of their products and some of the generic brands, particularly for Audi. So actually doing the formulations for the things like shampoos, powders and liquids. So that was an important step for us because we have been highly acquisitive over the 15 years that the organisation has been in place, but this is really the first time we've moved into an adjacency, and so important to see that we were able to drive value in spaces outside of rigid plastics, and that represents a very important step for us going forward. Second key component of our result was in late last year we announced a $30 million efficiency program which delivered us, or we started to see traction in terms of that program, delivering us about $3 million worth of incremental EBITDA for the half. And we would expect to see, we've announced that we'll see about $15 million worth of EBITDA, incremental EBITDA over the course of this year and next year as a result of that program. So pleasingly that program is on track. The other component is, I guess, our underlying business, and whilst we would say that we had very healthy growth through the acquisitions and also through the efficiency program, we did see a very subdued market conditions in terms of our underlying business. So we did see, in terms of an EBITDA impact, about a negative $3.4 million from the underlying activities. Those were primarily broken up into two areas. The first being a negative contract churn. So I'll come on to in a second, I guess, the forward outlook and some things that we're doing to address that, but they are primarily as a result of some contracts that were lost well over 12 months ago, and our profile in terms of contract wins is expected to be significantly improved going forward. The other area is in terms of that $3.4 million, approximately half of that number was also in relation to what we're calling either seasonal or impact industries in distress. So primarily the two key ones for us that negatively impacted on our result was dairy and agriculture and also mining. So we supply a number of packaging, both in terms of consumer products to the dairy industry and also for products for exporting. In terms of other issues, in terms of the result, cash flow continued to be a primary focus for us, and we again improved cash flow significantly during the period and are well on track to deliver 100% cash conversion, which we have done in all years since IPO. Also, I guess pleasingly for shareholders, we were able to increase dividend from 9.5 cents to 10 cents, and that dividend was franked to 65%, so previously unfranked. Just in terms of some key things in terms of the outlook. After 14 years, Brian Cridlin, who was our previous CEO, has retired, and on the 1st of December, Malcolm Bundy took over as CEO. He came out of Graham Hart's Graham Packaging out of the US, so he's an Australian who's returned back. Be fair to say that The strategy won't change, but his focus will be much more heavily around, I guess, a customer focus. We talked a little bit about negative churn, and I think there's a fair bit of disappointment as a result of him coming in. Sort of 25% of the management team has actually been changed out. I guess we're wanting to get more focus in terms of customer-led people into the organisation. And the other area is, I would say, moving from, although we've always been very heavily focused on efficiency, moving very much to strategic efficiency versus tactical, i.e. so moving out of the space of going into a factory and saying, can we do everything with less, looking much more at principles around lean and those sorts of techniques to drive a culture of efficiency into the business. In terms of those three key aspects that I talked about, acquisition, benefits from acquisition, delivery of efficiency and volume, we have said that in terms of a forward outlook, we would expect to see a very similar profile in the second half of this year, with obviously, particularly in relation to the volume piece, expecting a change profile going forward as we sort of see that negative churn starting to correct itself.